ExxonMobil, or XOM, is a global energy powerhouse far more than just a chain of gas stations. It's a fully integrated oil and gas giant, involved in everything from exploration and drilling to refining and chemical production. The company's roots trace back to John D. Rockefeller's Standard Oil, evolving over 150 years into today's behemoth. With operations on 6 continents, ExxonMobil manages risks by spreading its projects worldwide. Investing in XOM means owning a piece of the entire energy supply chain, not just betting on oil prices. Its business is split into 3 main segments: upstream, exploration and production; downstream, refining and marketing; and chemicals. This diversification acts as a natural hedge, helping the company stay profitable through volatile energy cycles. ExxonMobil's size and influence make it a bellwether for the entire energy sector. Strategic decisions here can ripple across the industry. For investors, XOM offers immense resources, a proven ability to weather market cycles, and a central role in powering the world. Understanding this scale and integration is key to evaluating XOM as an investment. The company's global reach and diversified operations provide stability in a turbulent sector. Its performance often signals the health of the broader energy market. As we assess XOM in 2025, its legacy and adaptability remain crucial factors. Let's dive deeper into what makes this company tick. Let's break down ExxonMobil's latest earnings. In Q1 2025, the company reported $8.2 billion in earnings, a drop from $11.4 billion the previous year, mainly due to falling natural gas prices. While oil prices held steady, weaker refining margins also squeezed profits. Despite the dip, these results are still strong by historical standards. Production in growth areas like Guyana and the Permian Basin continued to rise, showing successful execution of long-term strategy. These new projects are vital for replacing reserves and meeting future demand. The report highlights the volatility of the energy sector, but also ExxonMobil's resilience. Even in a challenging market, XOM generates significant profits and builds a foundation for future growth. For investors, the message is clear. ExxonMobil remains a robust operator, even when conditions aren't perfect. The numbers reveal both the challenges and the underlying strength of the business. For many, ExxonMobil's biggest draw is its dividend. As a dividend aristocrat, XOM has raised its payout for over 40 consecutive years. In July 2025, the quarterly dividend stands at 95 cents per share, yielding about 3.3% at a $115 share price. This reliable income stream is a testament to ExxonMobil's financial discipline. Even during downturns, management has prioritized the dividend, signaling confidence in long-term stability. However, dividends depend on cash flow and oil prices. Nothing is guaranteed. As long as oil stays above the company's break-even level, the dividend remains secure. Income-focused investors value this consistency, but should always monitor cash flow to ensure sustainability. XOM's dividend history makes it a favorite for those seeking steady returns in a volatile sector. ExxonMobil's fortunes rise and fall with global oil and gas prices. High prices mean big profits for the upstream segment. Low prices can quickly erode earnings. The downstream business, focused on refining, benefits when crack spreads, refined product margins, are wide, sometimes offsetting weak oil prices. The chemical segment's profits depend on raw material costs and global demand for products like plastics and packaging. Economic growth boosts chemical demand, while slowdowns hurt margins. Geopolitical events, conflicts, sanctions, OPEC decisions, can cause dramatic swings in energy prices, creating both risks and opportunities. ExxonMobil's integrated model helps buffer some volatility, but exposure to global forces is unavoidable. Investors must recognize that XOM's performance is tied to a complex web of market and political factors. The company's ability to adapt to these shifts is key to its long-term success. Understanding these drivers is essential for anyone considering XOM stock. Financial strength is critical in the capital-intensive oil industry. ExxonMobil has used recent windfall profits to pay down debt, keeping its net debt-to-capital ratio among the lowest in the sector. This strong balance sheet gives XOM flexibility to invest and protect its dividend, even when prices fall. Cash flow is the lifeblood of the business, funding operations, projects, debt, and shareholder returns. In Q1 2025, ExxonMobil generated $14.7 billion in operating cash flow, more than enough to cover investments and dividends. Strong free cash flow enables consistent dividends and share buybacks, boosting shareholder value. Share buybacks reduce outstanding shares, increasing earnings per share and potentially lifting the stock price. For investors, robust cash flow signals a well-managed, financially sound company. ExxonMobil's disciplined approach to debt and cash management sets it apart from many peers. This financial foundation is a major reason for its long-term resilience. ExxonMobil faces major headwinds as the world shifts toward cleaner energy. Climate policies, carbon taxes, and the rise of renewables threaten long-term demand for oil and gas. Stranded assets and changing investor sentiment, especially with ESG criteria, add uncertainty. Activist investors and volatile commodity prices further complicate the outlook. Navigating these challenges requires discipline and adaptability, but the risks for shareholders are real. Despite challenges, ExxonMobil is adapting for the future. The company is investing in large, low-cost oil projects like Guyana and the Permian Basin to ensure profitability even at lower prices. It's also focusing on carbon capture, hydrogen, and biofuels, leveraging its expertise to address the energy transition. The acquisition of Pioneer Natural Resources strengthens its position in the Permian, boosting growth potential. ExxonMobil's strategy balances advantaged fossil fuel projects with targeted low-carbon investments. For investors, ExxonMobil offers income, stability, and a pragmatic approach to the evolving energy landscape. Its scale, financial discipline, and focus on future growth areas position it to navigate industry shifts. While risks remain, ExxonMobil's adaptability and resources make it a compelling choice for long-term investors.